Hey everybody, it's Bill. It's Wednesday, June the 6th, and here's your trade analysis for the morning. The broader U.S. market hasn't even opened yet, and I'm pretty much done. So it's nappy time. Anyway, here are the trades to have taken today. The HLB fired off at 245. The first trade was a long breach of the high of the HLB signal bar, and you would have been stopped out on that for a 2-tick loss if you had set your stop right below the HLB line. The next best place to have entered would have been here at the low of this bar, which was the 345 bar, and shorting at approximately 2512-ish, 2511-ish, and then sitting on that all the way. Oh, and you set your stop, 2 ticks or 1 tick or 3 ticks or whatever you want to do above the HLB line here, and then sitting in that one all the way up to this bar, which was a spout, and closing it out at the end of the spout, which was 2464 for a 48 tick profit. Less the 2 ticks you lost here, a net profit of 46 ticks. You had a second opportunity to get in here on this 645 HLB signal bar that fired off, but you would have gotten stopped out 2 bars later when the European news came out. This was also the spout bar. It was really jumping around all over the place before it clearly started going straight down. So that probably would have been a stop out for most people. And just a review of the different methods of stops that you can use. The one that I like to use the most is to just place a stop a few ticks above or below the HLB line. If you're really conservative, the method that conservative folks like to use is do a trailing stop of the highs or lows, depending on whether you're long or short. The third technique is to use, I don't know if you can see this, but this light gray channel in the background is just a standard Keltner channel, and use the farthest band away from your price point. So for example, if you're going short, you would use this upper band. If you were going long, you would use this lower band as your guideline as to where to keep moving your stop as you're doing a trade. And last but not least, you could do the Eric, which is a suggestion from one of the subscribers, which basically you set your stop at the opposite end of the HLB signal bar. So for example, in this case here on the 245 bar, you would have set your stop all the way down here at 2502. Not for the faint of heart, but sometimes that works. Like down here, this HLB that fired off yesterday at 1845, even in the no trade zone, had you set your stop at the low of the HLB signal bar, that would have kept you in this trade actually right up until today at this point, but I'm assuming that you would have taken your profits either here or somewhere else. But anyway, that is the so 1, 2, 3, fourth technique for doing your stops. Hope that helps you make a decision on how you want to do your stops. That's it for today. Decent profit, and I will be back at you again tomorrow. Bye.